Hi, this is Bruce at Turnaround Stock Investing, a community of value investors devoted to helping you find, buy, and manage a portfolio of turnaround stocks. Please see the disclaimer below. Turnaround Stock Investing is not an investment advisor. This content is for educational purposes. Also see our disclaimer at turnaroundstockinvesting.com. Today is January 11th, 2016. And my topic today will be the commodity depression that is going on and the havoc that is being wreaked in commodity stocks. If you're not aware, and we'll go over this later, many stocks in oil service, coal, fertilizer are down 5 to 15% today after being down 20, 30, 40% over the last week for the first week of 2016. I believe that we are at the beginning of the end for this commodity bear market and that enormous opportunities are upon us. I am sure now that there are many value investors, any type of investor, that is in panic right now. But I wanted to shed some light on how I believe now is the time to really start to prepare your list of stocks that you want to buy. You're looking right now out of a page from a book that Ken Fisher wrote called The Only Three Questions That Count. It's a very good book, and I recommend that contrarians read it. For me, the value of the book came from this one page, in which he summarized how bear markets end. I have been a student of bear markets for 30 years, and I thought that this one page can summarize how a bear market bottom is formed. So let's take a look at what he's talking about here. He calls it his 2/3, 1/3 rule for how a bear market bottom occurs, or the sequence of a bear market. So let's read here. He calls it a gross generalization, but about 2/3 of the loss that occurs in a bear market or stock's decline happens in the back of the bear at the end. And this is an example of the 1973-74 bear market, which was a horrible bear market. But let's also use this as an example of how stock would decline that's experiencing extreme difficulty, because it's very similar, the patterns that exist between the general market and a stock that is falling significantly. He says here, you won't time your re-entry perfectly. So get over that. The back of the bear markets are brutal. He calls it the TGH, which is his term for the great humiliator. As he says, the stock market will do its best to humiliate everybody. So let's look what he says here. He believes that the first 10 to 20% of the duration after the peak is when the market slips away slowly. So let's look at this example here. What he's trying to say that from the peak of 1972's market, over this 2/3 period of time, so let's assume that this whole decline from peak to bottom, 2/3 of the time, you're basically looking at 1/3 of the drop. So in this case, the Dow Jones fell from 1119 down to about 100 here. So 2/3 of the time, you had a 14% drop. However, as we're looking here, 1/3 of the time, you witnessed 2/3 of the drop, a 29% decline. I believe that this is a great rule for what is going on right now with all of the commodity stocks. They are beginning to experience this dramatic decline in 1/3 of the time. So we want to be alert that the end of this bear market is occurring. We can't be sure when it ends, but as Churchill said, we are at the beginning of the end. Many contrarian investors, such as myself, are extremely excited and see tremendous opportunities. However, it's also a time of great risk if you're early. And I'll be going into a few charts today and in future screencasts with you as to what I'm looking at and why I'm looking at it. However, in summary, there's basically two ways that you can approach buying shares. First, I think it's imperative that you have a company that has a balance sheet that will allow the company to survive, because many companies will probably succumb to bankruptcy. And in that case, instead of looking at the stocks to buy, you may want to look at the bonds if they go into bankruptcy. So if you do believe that you have a balance sheet that is strong, One approach is to scale in and slowly acquire shares if you do believe it, such as I do, that this is the final panic. The second approach that you could do is to wait for the double bottom. And this does require enormous patience, but is probably the best approach. I have rarely witnessed a bottom that did not occur with a double bottom. And as you can see here in the 73, 74 crash, you had this decline, a rise, and then a double bottom. And that will probably likely occur with all of these resource stocks initially. Now, that could be difficult because when you do reach this final bottom, you will see stocks go up 200% potentially, and you may be pulling out your hair as that's occurring and you're not on board. But in all likelihood, those gains, a majority of those gains, probably 75% of them will be reversed in this retest of the bottom. So how you're going to handle this bottom is up to your own emotional stability and resources. We're now looking at a 20-year chart for the CRB Index, which is a reflection of a variety of commodities. And as you can see, wow, has it been a boom bust. But let's take a look at what's occurring right now. We can see the various level of support that have been created over the last 20 years. Here we have 1999, 2002, 2008-9 during the Great Crash, and right now, as I would call the China crash is occurring. What's distressing about this, and what also creates the opportunity, is that these support levels carrying out over here have been broken. So we were basically in no man's land with no support. And thus the reason you're seeing this crash in the commodity stocks. Here is a chart of copper over the last 20 years, and of course another boom and bust. But let's take a look at what's occurring here. So we had this base formation here, which you can say probably occurred as China was beginning its industrial revolution. And of course, as their demand increased, we began to see this. And then here's the bust and the financial crash. We saw China increase demand for commodities again as they reflated their market, just as we did in the recovery from the financial crash. And then, of course, we see the rolling over. But the point I'm trying to make is that it's really anybody's decision or thought as to where copper prices may bottom. Technically, who knows? It could go to $1.25. So again, you're in no man's land here, and thus another reason for the panic to be occurring. Let's now take a look at some individual stock charts. This is a chart of Basic Energy Services, and I'm not recommending Basic Energy, but I do look at it as a gauge of what's going on with the oil service segment. And as you can see, it has been a vicious bear market. So we've had a decline from 30 down to the $5 level, tried to base out over this period of time, and now the stock is $1.80. So percentage-wise, are we really following Fisher's rule? We have an 80% decline here, and then we basically have another 80% decline here. So we're not exactly following Fisher's rule, but what could be occurring is that things are happening much more quickly than they did in previous bear markets. This would make sense considering the spread of information now as compared to 1973. Here's a chart of Atwood Oceanics, which let's say in the beginning of 2014 was about $52 a share and is now $8.31. And we can see the trajectory of this decline where it came down, tried to find a base, and then has just basically been in free fall here, try to find another base and another free fall. So again, we're trying to say to ourselves, is this following Fisher's rule, where 2/3 of the time it occurs with a quarter of the decline, and then the remaining third of the time has 2/3 of the decline? And again, it doesn't seem to be the case here. And I believe that, once again, is the way information is spreading much faster, which also leads me to believe that we are going to see the effects of this bear market and the final flush out much faster, and we're probably witnessing right now. Here's a chart of Freeport McMoran. And again, I'm not recommending Freeport, though it is on my watch list. We can see here that it started at $38 a share and is now down to $4.31 a share. Carl Icahn has even been hit here. I believe Carl Icahn started acquiring a 10 or 11% stake right around this area at between $8 and $10, and he's now looking at a price of $4.31. So this bear market has spared no contrarian investor. And as I'll take you through in future screencasts, I have been trying to invest through this bear market, but have been stopped out, thankfully, due to my rules of stop. But now I'm in the position where I'm looking to re-enter. So I hope you learned in this screencast how bear markets progress and how they typically can bottom. We took a look at a few charts to see where we are in the progress of this vicious commodity bear market. I hope that you become a member of Turnaround Stock Investing and see future screencasts where I'll go over the stocks that you should be watching seriously and considering for your portfolio. Of course, any decision that you make is your own decision. Turnaround Stock Investing is not an investment advisor. We're a community here to support your efforts. Look forward to seeing you in the future.